recording from an article on startupmag.co.uk, top 57 SEIS funds in the UK. You can see this article if you go on the homepage, scroll down, and you can click back. On this page, you'll find a list of SEIS funds with contact details, plus a full guide explaining how this all works out. Let's dig in. So there's a quick introduction. SEIS funds can be good for both investors and startups. For investors, they offer significant tax benefits, including income tax relief, capital gains exemption, loss relief, and inheritance tax relief. For startups, they encourage early stage investment, providing essential capital for growth and innovation. This resource starts with a list of active SEIS funds and continues with an in-depth guide to help you navigate the UK SEIS fund ecosystem. Let's dig in. So you've got 57 of the most active SEIS funds in the UK. You have the names of the funds, investor details with the website, the LinkedIn and Twitter, city and country, and there's a list of contacts for each venture fund. You can click and go and get more information there. Let's scroll down. As you can see, quite a few there. You've also got a list of 342 VC funds that are available on Startupmag if you want to go a bit further. So that was for the list. Let's dig into the guide. So what is an SEIS fund? In the next sections, you will get to know everything about SEIS funds. What are they? SEIS for companies. So how can I qualify as a company, as a business? SEIS for investors, example with numbers. Should I invest in SEIS? Who cannot invest in AS? What is the 3-year rule? What is the 2-year rule? And can I invest in my own SEIS company? An SEIS fund refers to the investment scheme in the UK known as Seed Enterprise Investment Scheme. This government-backed program, initiated in 2012, is designed to encourage investment in early-stage businesses by offering various tax reliefs to individual investors. An SEIS fund is essentially a pool of such investments. They're managed by a fund manager. The fund manager will select eligible startup companies to invest in, following the rules and guidelines laid out by the UK government. Here are some of the major tax reliefs under the SEIS scheme. Income tax relief. So investors can claim income tax of 50% on investments up to £200,000 per year. Capital gains tax exemption. If the shares are held for at least 3 years, any gain is free from capital gain tax. Loss relief. If the company fails, the investor can claim loss relief. This can be a significant advantage because it lowers the actual at-risk capital. Inheritance tax relief. So shares in SEIS eligible companies will typically be outside of an investor's estate for inheritance tax purposes, if held for at least 2 years. Very important. Capital gains reinvestment relief. If an investor has paid capital gains tax in the last 3 years, they can claim to defer this when they reinvest the gains into an SEIS company. As with any investment, investing in an SEIS fund carries risk, and the specific benefits can vary depending on the investor's individual tax circumstances. Therefore, it's advisable to seek professional financial advice before investing. SEIS for startups, for the company. So how do they actually qualify? For a company to apply for a seed enterprise investment scheme in the UK, it needs to meet specific criteria and follow certain steps. Here's a quick overview. Eligibility. The company must be a startup or an early stage company. It must have fewer than 25 employees, assets of less than £350,000, and it must not have been trading for more than 2 years. Raising funds. The company can raise up to £250,000 under the SEIS scheme. 3, you submit the compliance statement. So the company submits a compliance statement to HMR Revenue and Customs using the SEIS 1. This can only be done after the company has been trading for at least 4 months or has spent at least 70% of the SEIS funds. 4, you receive authorization. If everything checks out, HMRC will provide the authorization that the company can distribute to its investors. The company will then receive SEIS 2 and SEIS 3 forms from HMRC. 5, you distribute tax relief certificates to investors. Using the SEIS 3 forms, the company provides tax relief certificates to its investors. The investors can then claim tax relief on their SEIS eligible investments. This process can be complex, and the eligibility rules and application steps can change. It's recommended to seek professional advice to ensure compliance with all the relevant regulations and to maximize the benefits of the scheme. Now, SEIS for investors. So here's an example with numbers. Let's scroll down. So this is obviously a simplified example, but you'll get to grips with it now. Step 1. If you're an investor that put £10,000 into an SEIS eligible company, the SEIS program allows you to claim 50% income tax relief on its investment, which is £5,000. So if your income tax bill for the year was $20,000, with your income tax relief, it would now be reduced to $15,000. Step 2. Let's say the company does well and the value of your shares doubles to $20,000 over 3 years. If you then sell your shares, the £10,000 gain would typically be subject to capital gains tax. However, under SEIS, this gain is exempted for as long as you've held the shares for at least 3 years. Step 3. If the company does not do well and your investment becomes worthless, you can claim loss relief. Assume that your marginal tax rate is 45%. The loss on the investment after considering the initial income tax relief is £5,000, since you receive £5,000 back in income tax relief. So your actual loss is £5,000. You can claim loss relief on this £5,000 at your marginal tax rate, reducing your income tax by a further £2,250, £5,000 times 45%. Now in step 4, let's assume you had previously sold an asset and made a capital gain of £10,000, of which you paid capital gains tax. If you reinvest this gain into an SEIS eligible investment, you can claim it to defer the capital gains tax that you paid. This effectively reduces the cost of your investment. Now, should I invest in SEIS? Whether you should invest depends on your circumstances, on the financial goals, your risk tolerance, and the specific opportunities available to you. Here are some factors to consider. SEIS tax relief. SEIS provides significant tax relief. These include tax relief, income tax relief, capital gains tax exemption, loss relief, and ITR, which can help to offset some of the risk associated with investing in early stage businesses. High growth potential. Early stage companies might offer high return potential, a lot more than mature companies. But there are also disadvantages to SEIS investments. High risk. SEIS companies, typically startups or very early stage businesses, which often riskier than established companies. There is a significant risk that the company could fail, resulting in a total loss of your investment. Lack of liquidity. This is quite an important one. SEIS shares are typically not traded on a public exchange, meaning that they can be difficult to sell. You may need to hold on to your investment for an extended period, potentially without seeing or receiving any dividends. Complexity. The rules around SEIS investments can be complex, particularly when it comes to claiming tax relief. Mistakes can result in unexpected tax liabilities. Given the above, SEIS investments can be a good fit for investors who are comfortable with high-risk investments. Understand the specific opportunities and risk of the business they're investing in and have a tax liability against which they can offset tax reliefs. Who cannot invest in SEIS? Certain individuals are restricted from investing in the Seed Enterprise Investment Scheme due to the specific rules set out by the UK government. These are intended to ensure that tax relief are not exploited and that they generally encourage investments in early stage companies. Here are some categories of individuals who cannot invest. Connected persons. Individuals are considered connected to the company and are not eligible for SEIS relief if they are a partner, director, or employee of the company in which they invest in, or a partner, director, or employee of a partner of that company. Substantial interest. Individuals who own more than 30% of the shares, voting rights to assets in a winding up, or control over the company are considered to have a substantial interest and are not eligible for SEIS relief. Associates. The restrictions are on connected persons, and substantial interest also applies to associates of the investor. Associates include business partners, trustees or any settlement in which the investor or the spouse or civil partner is a settler, and relatives, spouse or civil partner, parents or grandparents, children or grandchildren, but not siblings. And finally, we hit frequently asked questions about SEIS funds. What is the 3-year rule for SEIS? The 3-year rule for the Seed Enterprise Investment Scheme is generally related to 2 aspects of the scheme: company eligibility and inheritance tax relief. For the company to be eligible for SEIS, a company must not have been trading for more than 3 years at the time of investment. This rule is designed to ensure that SEIS benefits are targeting very early stage or seed companies. The 2-year rule for SEIS, for the investor, this is the type of tax relief that is available after holding SEIS shares for a minimum of 2 years. After this period, the shares generally become exempt of inheritance tax, which can be significant given that the standard rate is 40%. This means that if the investor dies, their estate would not have to pay inheritance tax on the value of these shares. And can I invest in my own SEIS? If you're a partner, director, and employee of the company, you can't. Similarly, you can't hold more than 30% of the shares, voting rights, or rights to assets of the company in a winding up. If you exceed this limit, you would be considered to have substantial interest in the company and you wouldn't be eligible for SEIS benefits. As you can see, lots of rules. These rules do change. They've changed in 2023. The good thing here is you've got a massive list of SEIS funds. Whether you're an investor or you're looking to raise funds, this is a great list to start. There you go. That was the top 57 SEIS funds in the UK.